Bitcoin has exploded above $75,000. Do we have a big bull trap before the major drop to lower prices? The charts show exactly what's coming next. What is our own plan for Bitcoin, both short-term and until the end of the year? The path we are following and the one you need to know to save your portfolio. Trading tips for everyone with Flaffy and Alex. Tune in to unlock the biggest secrets.
The opinions and views expressed on this channel are strictly personal and do not represent financial advice. Always do your own research before making any decisions.
And we continue with the chart analysis for April 24, 2026. A short video for you guys today, and an important update, because Bitcoin has exploded above $75,000. Do we have a bull trap before the big drop? Stay until the end to see our own plan for Bitcoin until the end of 2026. Trump is obviously continuing to de-escalate the situation with Iran, as he is extending the ceasefire following Pakistan's request. Now there's also news coming out that Iran is considering using Bitcoin for its oil payments. That said, guys, you should know that oil transactions are mainly settled in Tether, not Bitcoin. Still, it's a positive sign, it's making headlines, and it's a sign of broader cryptocurrency adoption. But it's not the reason Bitcoin is rising right now, and all the on-chain and macro data confirm that. I analyzed the reason in a lot of detail in last Thursday's video. Watch it later if you want to know more. Right now we're seeing small cap stocks hitting new highs. That means broad liquidity is abundant and is flowing into risk assets. That's the simplest way we can gauge liquidity flow. Moving on to Bitcoin, we see it has shot above $75,000 on the monthly chart. Obviously everyone has seen this trend line and knows it has now been broken to the upside. In other words, this white line that was pushing the price down has stopped acting as resistance. More and more people are starting to fear a bull trap here. Are they trapping us bulls here? Many believe Bitcoin will keep going up for a bit more and then crash down below $60 later on. However, my personal view does not agree with that opinion, because right here in the $60,000 $70,000 range, as I've said and repeated many times, we are seeing positive flows into Bitcoin. In other words, money is flowing into Bitcoin. And in this latest upward move we see that longs, people going long on Bitcoin, are increasing, while shorts, people shorting, selling Bitcoin, are shrinking. The dynamics from $80,000 to $95,000 were completely different. We can see it in the funding rates in the derivatives market. Right now they are very negative. And the dynamics between longs and shorts were totally different in that price range. Also, if we look at the same thing in liquidations and in volume delta, whether more people were selling or buying, we see that right now the delta here is more positive than it was between $80,000 $95,000. And the liquidations of shorts right now, people who are short while the price is going up get liquidated and lose money, are much more at this point. That also explains why funding rates are negative. Completely different dynamics compared to the $80,000 $95,000 range. So if we also look at the CVD, the cumulative volume delta, in the chart, we see the green line on the monthly chart, which is spot Bitcoin, and the blue line, which is the CVD on derivatives. The volume delta is basically following the price in this latest Bitcoin rally, which supports the fact that there is buying pressure in both spot Bitcoin and derivatives. In other words, price and delta trades are moving together. There is no divergence here, and that's a positive sign that there is stronger demand between $60,000 and $70,000 compared to $85,000 $90,000. The order book depth between 0% and 10% supports this as well, although recently the 10% level has turned negative, which warns us that the higher we go, the more likely we are to see a correction. But not a correction that takes us back to new lows. And that's clear from the fact that between 0% and 20% order book depth, and order book depth, guys, is the ratio of how many aggressive buy orders exist 20% below the current price versus how many aggressive sell orders exist above the current price. If that ratio is positive or negative, it shows us how much demand, or lack of it, there is in the market right now. At this moment there is plenty of demand in the market, as we can see from this chart. Right now it is very, very positive and there is differentiation. It's not dropping as low, and this wall is much thicker compared to the $80,000 $95,000 zone. I've mentioned this many times. So as long as this wall starts to weaken and move lower, and it has already started to a bit, then we will begin to see a small correction. but not necessarily a drop below $60,000. I'll share my plan in a moment, guys. Right now a lot of buy orders have stacked up at $75,000 in the order book, and sell orders have stacked up at $81,000. And $81,000 is also the realized price of Bitcoin, the average price at which all Bitcoin holders have transacted, sold or bought Bitcoin. So it's a significant price level, and reclaiming it would be important. Also, the liquidation heat map, where most liquidation orders are clustered if Bitcoin price moves up and players lose money, is sitting at $81,000. So the liquidation map also supports $81,000 as resistance. That's where I see the first real difficulty, $81,000, $84,000. That's the first tough zone for me. There we should see a significant correction, and the order book depth has already turned negative, warning us about exactly that. If we break through $81,000 and turn it into support, the next target would be $103,000, where a lot of orders have accumulated. On the downside, the general level is $58,000, and the liquidation map on Hyperliquid shows heavy liquidation zones at $73,000 down, with quite a few orders stacked around $65,000 and $98,000 on the upside. So that's roughly the picture right now. Now, what is our plan, both short-term and until the end of the year, and why do I see it this way? Before I explain it, guys, let me remind you that it is important to protect your identity and your crypto online. To do that, we recommend a VPN service such as ProtonVPN that has super fast speeds for great trading experience. You can find the link in the description. This way you also support the channel. Thank you. Now, on the daily Bitcoin chart, we had a day close above $74,000, above the wick, which means we had a break of structure. We made a higher high above $74,000 and the daily candle closed above it. That's a break of structure. However, we haven't seen it on the weekly chart yet. The previous week did not close above the $74,000 wick. So we don't have a weekly break of structure yet, but that's not necessarily bad. If this week also closes above $74,000, we will have a proper break of structure on the weekly chart as well, which strengthens our case that we're seeing stronger demand in this price range than we saw between $85,000 and $95,000. Also on the monthly, if we close the month of April above 79K, this will mean a bullish fractal has formed, and usually the likelihood for higher prices is much higher than the likelihood of lower prices, so I wouldn't bet to see prices below 60K anytime soon. The difficulty here lies in the average volume transacted from the all-time high till today. If we look at VWAP from the all-time highs of $126,000, we see that this green line is sitting at $84,000. Trading volume from April 2024 until now has ranged between $53,000 and $96,000, with the red line showing the highest volume around $67,000. What does this mean? It means that as we push higher, the $81,000, $84,000 zone we mentioned earlier is going to be quite a tough area for Bitcoin. Let's also quickly check the 200-period VWAP, the orange line, which is also sitting right at $84,000. So I'm sticking to my view. Short term, my plan is that we reach $84,000. We have already broken the trend line and we have a break of structure above $74,000, $75,000 on the daily chart, so the next stop is $84,000. $81,000, $84,000 makes sense, and I expect this to happen between April and May. In May we go higher. And since we have the midterm elections in 2026, this year, around October to November, what I see happening is that in May and June both Bitcoin and stocks will very likely continue higher, with Bitcoin possibly reaching above $96,000 and, in the most bullish scenarios, even around $112,000. $96,000 is my first target, for example. Then as we head into summer, July-August, I believe we will see sideways consolidation where some players take profits. After that, heading into the midterms, September to October, we'll probably move lower. However, in my personal opinion, I do not see Bitcoin making new lows and dropping below $60,000. I believe it will form a higher low, higher than $60,000. I don't believe it will fall below $60,000, especially when the majority are waiting to load up below 60K. This is my personal view. Nothing is 100% guaranteed. Guys, if you want a deeper analysis of the money flows, both in the stock market and in Bitcoin from institutional players, go watch last Thursday's episode. It gives a much deeper breakdown of everything I'm saying in this video, because a lot of people are expecting Bitcoin to crash, and that may not happen at all. Watch it, it's a very important video, and it would mean a lot if you could like, subscribe with the bell button on, and share the video with your friends so we can keep bringing you quality content. That's it from me today. If you want, drop your comments below and tell me what you think will happen with Bitcoin and what direction it will take. You can also find us on other social platforms like Twitter, where we share extra information that we don't post on YouTube. Thank you so much for watching, guys. See you.